Hey, Ray Hurto here at Real Estate Analyzers. We're going to be walking you through our Project Deal Analyzer in detail today. So if you've come here to learn about how this spreadsheet works or you have a question about a particular section, this is the video for you. First thing we're going to do is open it up. Now, if you've bought it and you've downloaded it, you're going to be prompted to enable macros and enable some content here on the page within the spreadsheet. And you'll get a pop-up saying to accept our terms, just click yes to that. And then what will happen is we will open up, it defaults to our summary tab. This tab is specifically for printable format. You can also export it as a PDF. Okay, so this tab has no input. So really what this is doing is it's just for you to look at when you are done. Let's enter some data. So we'll go to the data entry tab. First thing we'll do is we'll put in our property address, 123 Main Street. And now we're going to talk about the rehab development strategy. So are we doing just a rehab? Are we doing a rehab and maybe converting it to condominiums? If it's a single family home, then you would do rehab, do not condo convert. Is it new construction? And if it is it a single family, multifamily, or condos? If it is something else, then I would just put in rehab, do not condo convert, and you should be fine. But these are the most common items here. So we'll just do rehab, do not condo convert. And since we are not condo converting, the next section does not apply. The condo conversion tax fee. This is a yes, no field. So if you do a project and there are taxes or fees to create condominiums, then your town would tell you that, or your city would tell you that, and you just hit yes or no. So we'll just default that to no, not applicable anyway. Now, before we get going down the rest of the middle here, let's take a look to the right. And this is where we're going to be entering in what we think things will sell for. I just also want to draw your attention to the fact that many of these fields have little purple triangles on them. And those triangles will give you little helper tips and comments. So if you don't want to watch the whole video, or if you only need to know about a certain section of the video, maybe take a look at these comments and see if one of those fields that you have a question about has a comment. The number of units to be sold. This is what it says. How many units are to be sold? If it's a single family, then you just say one. If it's, say you're selling 3 condominiums in the city and they're all going to be sold for approximately the same price and they're all going to have the same configuration, you will enter 3, and then the unit type can be whatever that configuration is. Let's say it's a 2-bed, 2-bath. And your average sale price will be $500,000. Those are some nice condos. It's going to tell you your total revenue is 1.5 million. Now let's say you have 2 units that are like this, and then one is a nice penthouse or a bi-level, and that's going to be 3 beds and 3 baths, and that's going to sell for $650. You would just enter 1 on the left, show that configuration, and put in that average sale price. Again, it will give you your total revenue for everything and summarize it here. What it also does is ports it over to the left where it's going to go into our main column, we'll call it. If you need to kind of estimate what your sale price will be, because maybe you do calculations based on dollars per foot. So say on average things are selling for $350 a foot and you're going to create a 2,500 square foot unit. This will quickly tell you that that will give you a price of $875. So this little calculator does nothing other than just converting dollars per foot and sellable square footage into a price for your convenience here. There's another revenue section here towards the bottom, other revenue, and what that's for is things that are not unit sales. Let's say you get an energy rebate, or you get some kind of house that you've bought and there's a bunch of stuff in there that you can sell. Maybe you're going to make some money off of those items. You just punch in a dollar amount here. So let's say we get $5,000. This is obviously not required, but in case you need to track all of your dollars and cents. Okay, the next section here is where you'll enter your lot size. So whatever the lot size of your property is, say it's 3,500 square feet. Then if your town or municipality does have what's known as a maximum floor area ratio setting, you would enter that here. So let's just, for simplicity's sake, say it's 1. That means your maximum sellable square footage of that building would be 3,500 square feet. This allows you obviously now to work with an architect and start planning some designs of what your building may be. If this building is something that's existing and you're not changing the footprint, then none of this may apply. So again, this is dependent on your situation. Then what you'll enter next is your proposed gross building square footage. So this is how big the building is in total, not including, including the livable and non-livable spaces. So let's say in this example, 4,000. The next section will tell you, ask you for the proposed sellable square footage. So let's say in this case, we're going to have a 3,250 square foot sellable. You'll notice a couple things happening here. The first one is we have this first field, FAR efficiency. I won't dwell too much on these. You can read the notes, but basically this has to do with zoning, again, back in your town and municipality, if it's applicable, whether or not you're in that target range that is allowed. And then the building efficiency is telling us, this is actually telling us that we're at 81% efficiency, and you can actually set your own minimum targets here on the right. These again are just whatever you want them to be. Efficiency, very simply put, is how much of the building that you're making is sellable, and you don't want to have a building with too much unlivable or unsellable square footage, because otherwise you're paying to build it, but you can't sell it at that dollar per square foot that we discussed earlier. Now let's move on to the construction budget side of things. So let's say that it's costing $700,000 to build this. Now I may know it's going to cost me $700,000, but if you don't, this might be a good time to pause, move to the construction budget tab, and start to fill out some of these values. These are pre-populated values as suggestions. You can enter in what costs you may know or not know. Again, this is if you don't know what your costs are, but let's make the assumption that we know it's going to cost $700,000 because we got a bid from a general contractor. So that works out to a dollar per square foot of $215 for the sellable side and $175 gross. Now the next section here has a component on the right, which is about our pre-tax profit. And you'll notice that at the top of the spreadsheet here where things are frozen, we've got this section, maximum offer price and estimated pre-tax profit. The spreadsheet is calculating how much you will earn, and it is doing it based on these values on the right. So do you want to make a minimum of $50,000, or do you want to make a minimum of 15% of your total revenue? And as we saw, our revenue was 1.65. So if we change this to 10%, we will see that the 165 shows up over here as our desired pre-tax profit. These are just suggested values that are filled out. You can customize them on your own. And below this is an override. So say you don't want to use what any of this is saying. You say, I want to just make $100,000 on every project, and that's what I want to do. It will adjust it. This pre-tax profit will stay at $100,000 as you fill out the spreadsheet, and it will just adjust how much the maximum offer price will be. The next section here is your assignment wholesale finder fee. So if your business model is putting properties under agreement and then flipping them to other investors, you just want to make sure you enter your fee. Let's say it's going to be $10,000. Punch that in here. That is going to adjust the maximum offer price that you can offer someone to make sure that there's enough profit for the investor. You don't want to eat from the person that you are giving it to and take from their profit. So that will just adjust the purchase price. And then you want to enter a project duration, and you just need to enter the number amount, and it's going to calculate it as months. So let's say it's 12 months, and that will help us with other sections of this spreadsheet. One other thing I do want to point out is that you will notice some of these yellow fields here. These are little helper fields in addition to the comments that show up. If you don't want to see them, there is this drop down at the top here. You can just change this from yes to no, and it will hide them. We'll keep them on. Okay, the next section here is acquisition costs, costs that are paid when you purchase the property. We have some common line items. Everything is editable, so if you don't like what you see here, you can change it. And we have an additional one for custom, something that we may not have thought of. You can enter that here as well. This is going to also estimate some title insurance. This is based on just a percentage. And again, this is just an estimate, so it should be fairly accurate. Our next section is the project costs that are not included in the construction loan. So what that means is the lender is not going to reimburse you for these costs. They are most likely considered soft costs. In this case, we have a number of cash and concession line items, whether it's for a tenant, if you're purchasing a property with a tenant in there and you want to give them some money to help them find a new place since you will be doing some work to it, or any number of other individuals. So abutters are your neighbors. If you need to agree to put in a fence for somebody because either you damaged it during the process or you just want to be a nice neighbor, you can punch in that line item here. The buyers are the folks that are purchasing your property. So if you agree to give them a credit or you agree to give them some additional funds for like a custom closet or something, you can put that in here. The seller would be this person you're purchasing it from. So when you're negotiating your purchase contract, you say, you know what, I'll pay for 6 months of your back property taxes that are owed just to get this deal done. You can punch that number in here as well. I'm going to leave all these blank just because they're pretty self-explanatory. I'm going to leave everything else the way it is here. I might actually up this project management fee. We'll call that $15,000, just because $4,500 is a little light for a project manager. And depending on where you live, that may just be a month. Who knows? So moving on, we have the selling cost section, and this is what's paid when you sell the property. So this money isn't actually required, but we do need to track it in order to know how profitable we will be. Now, if we look back at the top here, number of deeded units. In this case, we're doing a 3-unit building. So what we want to do on the right is set our unit costs. How much per unit will it cost for these particular line items? So every time you sell a property, there's going to be a purchase contract. What does your attorney charge you for that contract? You would enter that here. If you are doing a condominium conversion, you could enter what those fees would be to draw up those documents. What you'll notice here is because we said no for the project type, we said do not condo convert, it already knows not to give us a price here, even though we've got a value entered. Most people are going to have a broker when they're selling, and this is the location to put in their fee, whether it's on a percentage basis. You generally put in, if you're working out some arrangement with a broker where they're going to give you a certain percentage if certain things happen, it's probably best to err on the side of caution and just put in what the maximum value would be that you pay them. Let's not say, oh, they're all going to get direct sales, so I'm only going to put 2.5% in here. Let's just keep it conservative. So you can play with that number. Then again, if we have another line item here for another condo conversion fee. So again, not applicable here, but if it was, that's where you'd enter the unit value. And then we have a government recording fee. So these are to record your deed and your mortgage and your note and the releases and all that fun stuff. Cost for miscellaneous things that may show up on the HUD or on the closing documents. And then we have a transfer tax. So depending on where you are doing your work, you may have a transfer tax, which is a percentage of the contract price. And that is also known as tax stamps or transfer tax. Whatever it is, you just enter that percentage here. And then we have another line item in case you need it for something that we haven't considered. The next section is the primary lender terms. This is where you're going to talk about your primary lender. What are they charging you for interest? Are they charging you any points? And what are their loan to value ratios? So points and interest would go in this section. Maximum loan to value. Now this is on just the purchase price. So your lender tells you, we'll fund 75% of the purchase price and 100% of the construction costs. You would put in 75% here. Your construction budget finance would be 100%. This middle one, this max LTV acquisition and construction, the lender may say, well, we'll fund these two items, 75% of your acquisition and 100% of your construction, but we will only fund 70% of your total project costs between the acquisition and construction relative to what they will resell for. And to make it easier, we've added little notes on the side here of the actual dollar values that the loan would be for. So in the case of acquisition, they'll fund, at this point, we're paying $657,967. The lender would fund 75% of that. That gives us an implied down payment of 25%. And they're also funding the full construction budget amount of the $700,000. And so we're just adding these two here together to make sure that this is the maximum amount that they would fund based on the revenue. So it's taking our revenue and giving us 70% of that. And we have some sections down at the bottom here that will go over exactly how we check to make sure that those aren't out of whack. We have some other operating costs. Now this is just what it costs you to hold the building. Property taxes, let's say that's going to be $2,500 a year. Property insurance, that's going to cost you $3,500 for a builder's risk policy. And then, you got to rent a porta potty, you got to pay for electricity. Let's say that costs you $250 a month. Pretty self-explanatory, just enter those values here. And when we entered those number of months it takes to complete, it's going to actually annualize all of this. I think we said 12 months on this one, so it's going to be this 9,000. We have now reached our maximum offer purchase price, so we've entered everything we need to know about the project, and now we are at the point where this number is a pretty good number, pretty good indication of what we can pay for the property. Now let's say you're talking to the seller and they say, well, you know what, I already got an offer for $675. What can you do? Well, you can say I'm going to pay $700. And if we enter that, now what's happening is that $100,000 that we wanted to make as our minimum has dropped down to $46,887. So maybe this isn't the right project for you. Or maybe you've contacted a seller and while $650 is the maximum you can pay on the spreadsheet, they're okay with $600. So you give them $600. Now your profit is up to $151. That's a great deal. So this allows you to enter in a maximum purchase price. You can use what the spreadsheet tells you, or by leaving this blank, or you can put in your own, and it will tell you what your new profit will be. And one last thing, very important, we do need to finish the rest of the spreadsheet here, and we need to go to this cash, fundraising, and lender requirement section. This is going to tell us how much money we need to carry this project from start to finish. How much do we need to invest in order to make this deal happen and not run out of cash while we're doing the work, or so we don't miss tax payments, our insurance payments, our contractors, because banks will reimburse you if they're funding your construction budget. They will reimburse you after the work is done, not while you're doing the work, not before you do the work. It's no different than how you typically pay your contractors. You don't want to pay them for work they haven't done, and the bank is not going to reimburse you for work that is not completed. So this is telling us how much we need to acquire the building, those acquisition and other costs that are not included in the loan but do need to be paid beforehand, how much we estimate the borrowing to be. So this loan that is now set up in the system, how much is it going to cost to carry it for that 12-month period? And then operating costs. So again, that is our utilities and taxes and insurance. You may notice that some of these numbers, these line items say plus 10% buffer. Well, we have a little buffer here just in case you want to add it. If you think the project may run over, you may want to say, I just want to pad it a little more, 10%, or we can put in 25%. And again, this is just to make sure that you don't potentially run out of money while you're doing the project and carrying it. Now, the next section here is amount per construction draw. This is telling us how much, and it's just an estimate from the spreadsheet, how much we're going to get from our construction budget of $700,000 each time, and it's rounding. So in this scenario, we're getting $120,000, and we're getting roughly 6 of those. And because we're not going to request a construction draw until we've spent $120,000, that means we need to have $120,000. And this is where a lot of people may get tripped up. Now, let's say you don't want to wait until you get to $120,000. Maybe you only want to do $50,000. You can absolutely enter that over here on the right, and it will tell you now that you are going to need 14 construction draws during the life of the project. So something else to consider, if there is a fee per construction draw from your lender, you may want to minimize it. So this is just a way to kind of balance these two components out. What this also does, if you're overriding what the spreadsheet's telling you, is it's changing this cash that's required from you or from the lenders, and it's decreasing it. So we're just going to put the 50,000 in. Now it's telling us we need 318,000 from private lenders. Well, there's this little field above here that says cash that the owner developer will contribute. So how much do we have that we can put in? Let's say we have 150 grand of our own money. We're putting that in. We're covering 47% of the costs, which means now our lender we need to come up with $168,000. Otherwise, this project's not going to work. We're going to run out of money and we will be in trouble. So if you have a private lender or if you have another source, what are you going to pay them? We would enter that over here. Say we're going to give them 10% on their money, and that's just a blended average and it's annualized. Now the spreadsheet shows us we need to put in another 17,000 here. All right, and that represents the interest that is due to them, and it shows us that on an annualized basis we're at the 10, just a little over 10%. Again, there's some rounding going on, but that's pretty much it. And if we go back up to this maximum override purchase price and we get rid of our override, you will recall that the number was 640. Well, because we have this 17,000 that is due to our investors, the profit actually went from 640 to 633. So the 633 is the difference now because we have additional costs. So again, you can set it back to 600 if that's what you are under contract for, and you'll just see that you're now making 134 instead of the 151. And that is pretty much it. Those are the things that you have to take into consideration. You might need to, bounce up and down a couple times because as you adjust one number, it may throw off another number. So just always take a quick scan up and down and make sure that everything looks good. There's no little red messages like the one that we saw here. And the last section here is our performance metrics area. If you purchase the building with all cash and you pay for it with no lenders at all, or if you purchase the building and finance with just a primary lender like a bank, or if you purchase with a primary lender and you have additional private lenders and essentially you're not putting any of your own money in, what do your return on investment numbers look like and how much cash is required? Going back to the construction budget tab, we did cover this earlier when we were talking about the construction budget, but this is an area where you can create your own budget. This can be printed, submitted to a bank. This is a way to, if you've never done this before, or if you want to get this going before potentially using our finance manager spreadsheet, then this is a way to kind of enter that in here, but it is certainly not required. This section here, now this is very cool because this is our profit sensitivity analysis. And what this does is it's showing you what your profit looks like if you have some variances. And it's pre-populated to have 5% intervals, both positive and negative from 0. 0 is down the middle for sales. 0 is across the middle here for construction. So let's pick a cell like this one here. And if we are selling for 5% less and spending 10% more on the construction, you can see that we're not making any money on the deal. So that might tell us that this is kind of a tight deal and we may not want to do it, or we may want to offer less. If we come right in on the money and spend exactly what we were going to spend, and we sell for exactly what we were going to sell, and all other numbers are constant, we are exactly where we pretty much want it to be from that profit standpoint. And obviously, if everything is great and we're spending less and we're earning more, don't know how often that happens, but that quadrant is over here as well, and it's obviously all green. But more likely than not, you're going to want to just pay attention to this section. You're going to want to see what your greatest tolerance is to make sure that this is a project that you want to invest your time, money, other people's money in, and make sure that it's not something where if all of a sudden the market shifts or unexpected costs come up, you are not making any money or you're potentially losing money, because that is the worst case scenario. And that is it. That is the spreadsheet. So hope this was helpful. And if there's any feedback, please go ahead and submit it to us, and we'll take it into consideration and maybe build it into a future version of the spreadsheet. Thanks.